Hi friends! Today we have come with an entirely different topic, something that all Indian expats had been keenly following since yesterday. Yes, it's based on the Indian Budget 2020 announcement.
Our topic of discussion is about the new taxation changes for NRIs, as well as the changes that determine the NRI status of expats living outside India.
Why did the announcement create so much of panic and discussion within the NRI community? As you know, NRI Non Resident Indian is any Indian citizen living outside India, say for job or business, for a certain duration of the year. Now, why is this status important? Because NRIs enjoy some benefits, especially tax exemptions for the money earned abroad and remitted to India.
Yesterday, during the budget announcements, Indian Finance Minister Nirmala Sitharaman proposed some amendments to these taxation rules concerning NRIs. These announcements shocked the whole NRI community, especially NRIs from the Middle East.
First, let's look into the happenings from yesterday, and towards the end, we will conclude with the latest updates from Indian government. So make sure to watch till the end.
There were two main points from the announcement that panicked people. First, it's regarding a threat to the NRI status. Second one is regarding taxation for NRIs.
Let's get into the first point regarding NRI status. To be categorized as a non-resident, an Indian has to live outside India for 240 days. Previously, this was only 182 days. That is, to have an NRI status, he or she has to live outside India for at least 8 months of the year. Previously, this was only 6 months. Now, why is this an issue? Because there are many Indians, especially businessmen, who run their businesses abroad, yet have the flexibility to stay in India, say half an year. Just imagine the big shot business guys like Lulu Group, Landmark Group or Aster Healthcare, they are also doing business in India. So they have to spend time in India as well. If they lose their NRI status just because they were not able to stay out of India for 8 months in a year, they might have to start paying their taxes for all their global businesses to India.
The second concern was regarding the new taxation proposal for NRIs.
The message was an NRI who is not taxed in his foreign country of residence will become taxable in India. Now, this would greatly impact Indian citizens living in tax-free countries like the UAE, Saudi Arabia and many other Middle Eastern countries. According to the news, the budget has proposed to tax Indians who are neither tax residents in India nor tax residents in any other country. The budget proposes changes to income tax law to make such individuals deemed as tax residents of in India. In effect, all your international income will be levied tax in India. This is not a small thing. Having no direct tax doesn't mean it's tax-free. There are indirect taxes as well. Direct tax is the tax on your income, whereas indirect tax is collected as GST or VAT. Wherever there is a lower income tax, the indirect taxes will be high because the governments need money to run. They invest heavily in infrastructure and other public facilities. To put it into perspective, let's consider an NRI earns 50 lakhs. Big amount, but easier to explain. As indirect taxes, he spent 15 lakhs. His personal expense is 25 lakhs. He has remaining 10 lakhs as savings. Imagine if he has to pay tax in India for his income. Say 30% as tax would be 15 lakhs, but he has only 10 lakhs with him and the rest were expense. So this is not justifiable.
All these discussions and panics were circulated around yesterday even in mainstream media, let alone social media. Yesterday, with the lack of any further clarifications from the government, these amendments were scrutinized for all their demerits. No one had a clear idea on what basis the taxation would be applied on. Is it the total income or the money remitted to India? If the taxation is on the remittances made by NRIs to India, then it would greatly discourage them from investing their money in India. This will ultimately affect the Indian economy. In turn, they would increase their investments in their country of residence like in UAE.
The new NRI status issue would discourage NRI entrepreneurs from venturing into Indian markets. To expand their business to India, initially they would have to spend a significant time in India, and this would jeopardize their NRI status. And losing their NRI status, they might end up getting into the Indian tax net for their entire global income. This was the story till yesterday. Today, for good, Indian government from the finance department has come up with clarifications on all the above points. It has been made clear that NRI will be taxed only for Indian income and not on their foreign earnings.
Let me quote the government statement. Income generated in tax-free jurisdictions will not be taxed. Another statement from government says, the Finance Bill 2020 has proposed that an Indian citizen shall be deemed to be a resident in India if he is not liable to be taxed in any country or jurisdiction. This is an anti-abuse provision, since it is noticed that some Indian citizens shift their stay in low or no tax jurisdiction to avoid payment of tax in India. The new provision is not intended to include in tax net those Indian citizens who are bona fide workers in other countries. In some section of the media, the new provision is being interpreted to create an impression that those Indians who are bona fide workers in other countries, including Middle East, and who are not liable to tax in these countries will be taxed in India on the income that they have earned there. This interpretation is not correct. In order to avoid any misinterpretation, it is clarified that in case of any Indian citizen who becomes deemed resident of India under this proposed provision, income earned outside India by him shall not be taxed in India unless it is derived from an Indian business or profession, the government added.
So, the bottom line is Indian citizens who do not stay in India but have significant economic activities in India would now find it difficult to escape paying taxes in India. Imagine an Indian businessman earning the majority of his earnings from Indian business. He spends time outside India only to get an NRI status, misusing this provision to evade tax in India. In these terms, it's a good move from the government. But government should also look into legit cases like people working in oil rigs. They need to spend 50% of their time outside workplace for health reasons. If they lose their NRI status because of the new rule of 8 months a year, that's totally not justifiable. But we are sure Indian government will definitely consider these cases before amending the law.
Let us know your thoughts about the new proposals. We would love to hear from you, your views, opinions and concerns if any. If you would like to have more such interesting discussions, please let us know in the comments below. And if you like the video, please like, share and subscribe.